Let's review the markets and see whether we need to be worried about a crash coming. And I'm not just talking about stocks, but of course we're talking about Bitcoin too. And we got a few different topics in this video. I already said Bitcoin, stocks, we got the Fed too. We got to talk about that meeting last week because that's also what's causing a lot of these problems. So first off, let's start with Bitcoin. So of course you already know this Bitcoin action has been brutal. People are crying right now. And if you've seen our previous videos, you remember we were drawing this pattern that Bitcoin was forming. It was a consolidation period. And I think it was the last video or the video before that we actually thought it broke down, but it recovered back. But sure enough, a week later, yeah, this is an actual breakdown. You can see this is a real bad bar right here. And as I'm recording this, I mean, it is recovering a bit. You could see it went lower today and popped back up, but this still does look like a pretty clear break. Now, that's not to say this thing can't rebound back, but the most likely outcome here is lower. That just seems to be where the trend is going. And it's funny because if you were investing in Bitcoin for a store of value, I mean, that's really not what you're getting right now. Whether you're trying to speculate or not, it is indeed a speculative asset, at least for right now. Because if you look at actual currencies, you know, the ones backed by countries, they don't ever fluctuate this much. Now, we've talked about many times on this channel where it's fine to diversify into Bitcoin. I was saying something like even 5% of your net worth would work. But when you see action like this, you know that, yeah, it's not really stable. Will it be in the future? Yeah, sure, maybe. But right now, it's more speculation. So if you're thinking about getting in, you'll probably get a pretty good buy point here. This thing could really collapse lower, especially after breaking this. And the entire crypto space is getting hit pretty hard right now. And it is interesting to see because it's just leading to people getting more and more tired. We've talked about this before, how there are just mini bubbles and busts constantly now because social media has sped everything up. And I'll tell you what, a lot of people are trickling out of the market because they don't want to mess with it anymore. They're tired. And when we see a real drop in Bitcoin and cryptos, I think we're going to see that accelerate even more. Now, another thing that screwed up all these markets was the Federal Reserve meeting. So last week they surprised quite a few people by shifting their dot plot for 2023 50 basis points higher, which no one likes because no one even wants to hear the thought of raising rates ever. The market is going to get spooked immediately, and that's what happened. And by the way, this research is coming from Alex, our head researcher at Macro Ops. This is one of our premium reports. So the reason this is a problem that they're saying they're going to raise in 2023 is because they spent the last year trying to convince everyone of their structural shift in their policy, that they were going to be flexible in how they're targeting inflation. So basically the Fed was shifting how they do things. Normally if the economy runs too hot, what do? Raise interest rates. But now what they're saying is that we're going to let the economy run hot and we're going to keep interest rates low, which is kind of wild, right? Because that's not what they've done forever. This is a new change. But the problem with the new change is that the market doesn't always believe you. That's what the whole game between the Federal Reserve meetings and the market is. They say one thing and then the market decides, do we believe you or are you lying? So it does become a big game of communication. It's just not clear. So what the Fed has been trying to communicate is that, hey, we're going to keep low rates forever. That's what they want people to think, so that the market can keep going higher and the economy can run well. But now that we saw our first signs of inflation running above target, the Fed got a little bit scared and they shifted their guidance on rate hikes. That was this right here, saying that they were going to increase them. And this is a serious communication blunder because it detracts from their credibility in what they were saying before, right? That they were going to have easy policy in the face of improving economic growth. So low rates for longer, even as we're doing well. But now investors have a reason to question their faith in the Fed because the market is always trying to anticipate the future, right? And the market is smarter than the Fed. And when I say the market, I mean the whole market together, which we can say is its own being, even though it's made up of all these individual investors. So even if the Fed says, hey, we're going to keep things easy, if the market thinks, hey, no, the economy is going to improve too much and you're going to go back on your word, then they are going to price stocks and all the assets, including Bitcoin now, which is part of the mix. They're going to price it based off what they think, not what the Fed says. And when the Fed says they're going to raise in 2023, which of course they don't know if they're going to raise or not, right? 18 months down the road is so difficult to predict. But the fact that they're even thinking about it, the market doesn't like. So that was a mistake if they're committed to their idea of keeping rates low. Now, regardless of the Fed's error, this doesn't change the fact that the expected return for equities are low over the next 10 years. So this red line right here is the 10-year expected real returns for the S&P, and you can see is negative, which is pretty good for gold if you're looking at precious metals, which we'll talk about in a second here. But if we jump deeper into the equity markets and what's happening there, we could see that there are basically two ways this can go. Either the market is about to roll over into a couple of months of sideways chop and volatile summer doldrums, which is what I was saying in the last video, that hey, things are opening up, people are going to be away from their computers, they're not trading, even more so than any other year, because we're coming out of a pandemic. You're going to see a lot of just bad chop. But the other option is that the market rips higher from here, led by growth stocks, and then rolls over and enters an extended range of sideways action. So this right here is showing the second scenario. So here we are year to date, it could rip higher, then then collapse, then go sideways. So of course, anything can happen in the market, but in the two scenarios we see, it's not a question of it happening, it's more when. Are we going to see that pop before or are we not? You can see from these charts right here that year 2 of a bull market is often an extended period of consolidation. So if we're saying that a new bull market started after the Corona crash, then this second year of it, we're going to see a lot of sideways action. That wouldn't be out of the question. You can see that happen in a lot of bull markets here. You get that first year thrust and then that second year consolidation, sideways movement. So if the market doesn't follow scenario 1 and go straight into the summer doldrums rolling over, then growth stocks look really good here to outperform. The growth versus value weekly RSI is turning up from deeply oversold levels. You can see right here, this green dot, it's popping. But if we look at the fund manager survey, very few managers are expecting a sell-off of much size over the next 6 months. And what do we know? Well, if everyone's expecting one thing, the opposite usually happens. So maybe we do get a rollover faster than intended. If you look at the S&P, it's really trading in a sideways range right now where both breakouts and breakdowns have been failing. So if you are a shorter term trader, you want to remain pretty much neutral until there is a solidified breakout above or below this range. Going back to gold, it's at a major technical inflection point right now. And I know a lot of you follow precious metals like gold, so we'll talk about it. Fundamental bull case is as strong as ever, but gold needs to hold its current price range. Otherwise, we'll probably see another couple of months of chop and volatility. Now, gold usually respects its middle Bollinger Band trend line when it's in a bull market. So if it can hold this, that's a good sign. There's a good quote here from Bruce Covener, the market wizard, about what we're kind of doing in the markets right now. He said, one of the jobs of a good trader is to imagine alternative scenarios. I try to form many different mental pictures of what the world should be like and wait for one of them to be confirmed. You keep trying them on one at a time. Inevitably, most of these pictures will turn out to be wrong. That is, only a few elements of the picture may prove correct. But then, all of a sudden, you'll find that in one picture, 9 out of the 10 elements click. That scenario then becomes your image of the world reality. So that's exactly what we do at Macro Ops, right? We're looking at various scenarios and then try to gauge which one is going to happen. But of course, as new information comes through, which with the stock market you're getting every trading day, things are going to change and you got to adapt with it. And that's how it works as a discretionary macro trader. But even as a systems trader, which is, what we do here at Fallible, you still got to keep an open and flexible mind in terms of all the scenarios that can play out. So you guys know how our system works, right? We got the TSI scanner that basically ranks every stock in the NASDAQ by their momentum, which we get a nice little number right here. And then each month we're rotating into the top 5 highest momentum stocks. The goal is to always have our money moving higher, obviously. And we've been talking about what could happen here. And it looks like the NASDAQ broke out above its previous high, which is a good sign. But again, there are different scenarios that could play out here. So one is that the market takes off and we hit a bunch of targets in a lot of the stocks that we're in and we start taking profits. We hit as many as we can until the market turns around and goes lower for a while, which is fine because of our risk management where we're taking profits off the table. We're less exposed to the turnaround. But the other possibility that can happen is that the market turns around right here. And then what? We take some losses. And this is where the mental flexibility comes in. Because if you look at just this short-term period like this summer, depending on what type of system you're trading, it could look bad. But you extend that time frame even longer, then you could see the probability of the market ripping hard in September. Or again, it might not. It might be bad going into the end of the year. But when you have a system and you have the right mentality, that's when you could zoom out even longer and look over a 5-year period and see how you're doing there. It comes back to playing the long game. And that's what you got to do if you want to be successful in the stock market over the long term, if you really want to build your wealth. If you get too mentally focused on just the short game, like what's happening over the next month, you basically get caught up and you start feeling emotional, you do stupid things, and you miss out on those longer term gains. And that's the biggest trick about systems trading. You got to stick to that system. And the system can be so easy to use, just like our Fallible system is. But guess what? The market goes up and down. So it becomes really a mental game more than anything. But as always, if you want to know exactly how our system works so you can use it too, just check out our free training here. I'll put a link to it in this video and down below in the description and comments. It's the same system I use and all our Fallible members use. Click here and you will go to that training. And in it, we talk about how systems trading works and how you could benefit from it. So click here and I will see you in that training.